Hey guys, welcome to the new screen. Yes, I understand it's a little low resolution. We'll have that a little bit better tomorrow. Um, sorry about that, but just listen to me tonight more than anything. Okay, we are live on the YouTube as well. I'm going to post that link. All right, that's over there on the YouTube. We've got all kinds of stuff not working tonight. All right, how's everybody doing? Let's take a look at the market. All right, I can pull this a little bit wider, trying to get this as big as possible for you guys. Yes, yes, upgrades. I've been trying to get it to where I can control, like, a spate of screens that you guys can see, because you're only seeing some of my screens. Still, this is not all my screens, but at least this is a good start. All right, so today was a bottoming tail candle, down and up. You can see, so it left a long wick down at the bottom. This bottoming tail candle is it's almost like, just imagine it like a hot air balloon or something with a string, just like so. When there's a very long wick like that, that's a good rejection. It may mean that we will not see these prices again. Do you guys remember when the last time I said that? Because I know I say that sometimes. I'll tell you when the last time I said that. I said we may not see the prices down in the wick that were occurring ever again. We may never, it's possible you may never ever get to see these prices that you saw today in the market at the lows today ever again. And I said that once before. And when did I say that? It was over here. I mean, I've said it before, but for example, here over here, this was a bottoming tail candle right after a couple of red candle declines, right? We had a topping tail. That's the opposite. That means, we're going down. But we had a bottoming tail candle. And have we seen those prices again? Never. You'll never be able to get those prices ever again. So this is a good candle today. It's pretty bullish. And hopefully you can see that, guys. Sorry if it's very tiny. SPY. By the way, yeah, just let's take a break for 1 second and tell me, are you able to see? Are you able to see kind of like what I'm showing? You can't see my mouse, so it's really tiny. The upper left window. So I have 4 windows. The upper left window, the far right candle. That's today. I gotta zoom up a little more, when we get into this a little bit more, so you can really see it. Okay, but I was talking about, for example, a month ago on a month ago on February 1st, we had this bottoming tail candle, and that was a really strong rejection at support. And so I said, we may never see these prices again, and sure enough, we haven't. And we just basically had that same thing happen today. So I hope it holds moving into the future. If it does, we may break all-time highs this week for sure. I'm not going to say that's for sure. I'm just saying we may break all-time highs this week for sure. If we're going to, it'll be this week, if not tomorrow. So we'll see how that goes. Sometimes, we have a patient couple of days that chop around. But look, I mean, today we went from 381 to 391 on the S&P 500. That's 10 points. Do you know how many points away the all-time high is? The all-time high, the entire market, is only 3 points away. So I think that could happen tomorrow. Tomorrow we could pop all-time highs. If we do, it might be a little bit of a fake out. don't go get excited. What we would like to see is for it to break that high and then for the next couple of days move around, come back down and bounce off of that high. And that would be the time to enter. So it could be like, Monday, Tuesday of next week would be a great time to enter. Tomorrow could open lower. It could happen. We shall see. Doesn't mean that tomorrow won't go up. If tomorrow's going to go down, the best thing the market makers can do is open up and then drop it on you. If they want it to go up, they'll open it down and then bring it up after they drop you way down. All right, so let's take a look at the VIX. So today the VIX hit 23.3, and I'm hoping we can get down there into the 22, 21 range. If tomorrow the VIX drops below this 21 right here, that would signify that the market's going to pop all-time highs tomorrow. So if tomorrow VIX gets below 21.35, right now it's at 23.35. So we just have 2 more points on the VIX to go down. If we can do that, then we're definitely popping all-time highs tomorrow in the market. Which, if it does that, it's going to then pop 20. This week, we could be popping that champagne bottle. We shall see. All right. And another thing, guys, who are watching the live stream, is my audio in sync. So here, I'll just clap. Ooh. Slight delay. A second of delay. All right. Interesting. Okay, I could probably set that up. Probably requires a little bit more CPU speed. But all right, so today we traded Apple mostly and Disney. And what else was it back here that we were trading, day trading? Was going to be SOS, but look at SOS in after hours. Woo-wee. And look at CAN in after hours. Beauties. And all right, we'll take a look at those. But Apple also in after hours did really well, and Zoom, of course. We're going to take a look at that at the end of the session. But today we mostly traded Apple using the 2-minute candles. And Keith, are you here? Did you get a chance to trade with us today? Because I know you love trading that 924 strategy, and I wonder if you had a chance to trade with us on any of those. And I know that a lot of the others did, but today we traded the 2-minute candle technique. And let me pull up Apple. Oh, this is Apple now. Okay, good. All right. Fair enough. All right, now if we pull up the 2-minute candles, the 1-minute candles, that won't quite be enough for me to illustrate how these trades went today. It'll be too choppy. So to filter out some of the noise, we trade on the 2-minute candles. So let me pull those up. And what that does is a lot of the shakedowns that go on the 1-minute candles, so you'll get some pullback, and you'll get some choppiness going on the 1-minute candles. A lot of that is eliminated when you jump over to the 2-minute candles. And so what that does is it shakes out a lot of the shorter term traders, who are the ultra short term traders, like the scalpers and stuff. You don't want to get sort of like mixed in with the scalpers if you're trying to just, hold for like that full move right there. So you got to pick that time frame so that you filter out what they're doing. In fact, it might have been a good idea for us even to be trading the 3-minute candles on Apple today. Let's take a look at that chart. Yeah, that's pretty smooth too. Although there's less trades, but we still would have gotten them all. So for the most part, hopefully you guys can see that. I'll zoom up a little bit more. For the most part, what we did was we took the green candle, broke over red candle high on the 3 minute. We did that on the 2 minute, but here we can just use the 3 minute to illustrate. And would have gotten in here at 123.77 and then scaled out at 124.21. At that exact moment, we move our stop to break even. So once you are profitable, you move your stop to break even to secure your profits. So you sell a third of your position, a quarter of your position, half of your position, something like that, but you keep money on the table, and then you secure your profits. And the reason why you move to break even after you take your first profits, and the reason why we take our first profits at an earlier point, which is not super speculative and is a lot more probable, is exactly for that, so that we can take some profits for certain. We get in this trade, we make some money, we make sure we get out for no loss of our capital, and then the profit that we took, the 33% or 50% out or 20% out at that small gain, whatever that was, becomes our locked in profit. But when the trade keeps going and it keeps going on you, we follow the bottoms of the candles and we end up locking in a lot more. And that happens multiple times throughout the day as well. It did for us. So often you're just locking in a little one. You're locking in a little gain, and then you have another, 66%, 50%, something like that, 75% that you're holding that you'll get out of at break even to preserve your capital, but that can continue and can make you a little more sometimes. And it happens frequently. So Sergio asks why the 3 minute, not the 5 minute. For sure, you can get in sooner. If you do take the 5 minute, basically you're saying, I trust this market is just going up and up and up and up. And if I wait 5 minutes to get in, well, it's going to be a lot more than that, because it's got to put in a red candle and then it's got to put in a green candle that breaks that. So it's going to be at least 10 minutes. And you're saying, okay, if I wait 10 minutes to get into this, it better run for 15 minutes, something like that. So by taking the 5 minute candle, you're already kind of saying, I know this market's doing good. And we don't know that. You can trade on the 1 minute, but you're going to get mixed in with a lot of scalpers. Scalpers will even take shorter time frames, but a lot of scalpers take the 1 minute time frames and 1 minute breakouts. And you're going to get mixed in with them trying to sell. They're going to be trying to sell at their little scalped profit, of 5 cents and 10 cents. And that's going to pull back right when you're getting in, and you may even get stopped out. But if you jump up to the 2 minute candles, that gets filtered out. You don't get stopped out. Your stop on the 2 minute candles is a little bit wider than it would be on the 1 minute candles. And because of that, that keeps you in the trade a little longer. And it depends how which stock, needs the 2 minute, 3 minute, 4 minute, or 5 minute. It just depends on how it's behaving that day. I think probably today, in retrospect, we could have even gotten a little bit of smoother action out of the 3 minute. So that's why we're looking at the 3 minute here. Okay, Sergio. But really the 2 minute is the most idyllic one. And that's the one to really go for. But sometimes if that's, getting too noisy, look at the 1 minute. Let's see if we can switch fast enough that you can actually kind of perceive this. Got to zoom out just a little bit so it's not too big for you guys. All right, so now on the 1 minute, ignoring my large 5 minute overlay candles, on the 1 minute, if you can see those little teeny candles in there, hopefully you can. Let me see if I can make them highlight. Nah, not really, but these candles anyway, yes. You can see that the wicks are often overlapping the other candles a lot. And that's just meaning that there's a lot of friction between the highs and the lows of the candles. And those are going to cause a lot more noise and stop you out. So now look at that compared to the 3 minute. And you can see, I can already see that things are a lot smoother. on these green, these green runs. They're not getting stopped out is for one of the things. Like for instance, the size of this candle right here, this green candle, the size of it, the stop would be at the bottom of it. Next candle is this red one, it's not stopped out. Next candle is this red one, it's not stopped out. This candle could potentially be stopped out, but if you were calling the pivot low right here on that first red candle, you would not be stopped out. So you'd still be in this trade. So the 3-minute really, really worked on the iPhone. Now, someone over the iPhone says, hey, what's the study with the red green area and what does it do? That's a custom indicator that I programmed, and you can find that in my link tree. Let me just post that now. Beep, beep, beep. So that's at Linktree /chart trader. Linktree is spelled linktr.ee. Linktree /chart trader, and you can find my indicators there. All right. So Apple presented us with numerous trades today. I'd say about 4 out of 5, about 80% of them were profitable. They worked out really great. And look at that. Of course they were. Now we were watching a number of big caps like that for some good movement and for some easy trades. And we also traded, what was the other one? Apple, and we did a little bit of Exxon. Disney. Disney was the other one. So we traded Disney for most of the beginning of the day, and then we just let it do all this retracement trading. We didn't take much of any of that. We traded that on the 2-minute candles, but as you can see, what we went after was when it started to break to the upside. We got all these different moves, and it worked out really well. And we also traded Exxon Mobil. It was a little bit choppy, but it started to get smoothed out after a while. And then we went to abandon it after it started to pull back. But basically what that green, area underneath the charts tells me, and that's why I custom program that because I like it, is it tells me if the stock instantly at a glance, look at behind me on the TV. Did you see that with like CNBC? When something's up on the day, it ought to be green. And when something's down on the day, it ought to be red. And I can see it at a glance. You don't know if you're looking at a section of price action. You don't know if that, is going down, but up on the day in the green, or if it's down and in the red. And so that just helps me figure that out. So that indicator of mine that I custom programmed is at my link tree. Yep, exactly. Yes, sir. Yeah, so today, somebody says they got into Exxon Mobil at 32. Today it's opened at 56 and went up to about 57.60. We took some trades on it. I think it was mild. We made a little money on it, but it was roughly break even because it was pretty choppy until that very last run there, which was pretty nice. Let's see, and we were watching Starbucks to see if there was a trade to come in. It did not come in. And then we did take some breakouts on Morph, MORF. So let's take a look at that. Let's get the beginning of the day lined up. All right, on the 3-minute candles, as you can see, the opportunity was smooth and easy. So this is why when you're playing those high frequency trading breakouts, if you don't have a fast setup, and when I mean fast setup, I mean ultra fast setup that you're paying hundreds and hundreds of dollars a month to lease, one of the top platforms, brokerages, and execution platforms. If you're not on one of those, you probably should be taking this is the 2-minute candle, the 2-minute candle chart. You should probably be taking the 2-minute candles on these small cap momentum breakout stocks. And when you do, you should not be using our all-in strategy. That's too big when you go with a 2-minute candle. Because think about it, if you're high frequency trading and you're taking a breakout and you're just taking a couple cents, 10 cents, 20 cents, and then it falls back on you and you got to get out, right? 10 or 20 cents. And that's in one candle, 1-minute candle. Well, if you were to stay in with all of your money on a 2-minute candle basis, oh man, you could see, I mean, I'm sure you understand, you could see multiple dollars of decline before you even get stopped out. So therefore, you cannot go all in when you choose to do a non-high frequency trading strategy like a 1-minute candle, 2-minute candle, or really those are the ones you should follow: 1-minute candle and 2-minute candle for the momentum small cap breakout stocks. So therefore, you should choose something more like 10%, size down 1/10, 10%. Now, if you were to take like a 3-minute, a 4-minute, or a 5-minute candle, which I don't know why you would, because a lot of these small cap momentum stocks crap out pretty soon. They don't really give you big long runs. But the reason why you would take a 5-minute candle is because you are hoping for a very long run and you just want to stay in for maybe you've got that 1-day trade and you would just want to stay in for as long as you can to get that maximum profit. Well, the 5-minute candles are going to be the one that do it. But the problem with that is, again, you could stand to lose, $5 to $15 before you get stopped out with a 5-minute candle on something like this, right? So it can happen. A big, huge drop can happen. And so consequently, you should probably maximally take 5% allocation on a trade like this. All right, now at this time, let's take a look at some of the stocks you want to take a look at. And I'll tell you what I think. And what I'm going to do is I'm going to take a look at them on the daily basis and try and give you a prognosis moving forward. When it comes to these penny stocks and OTC stocks, they're like less chartable, so don't expect me to be able to see anything on any of the OTCs. So if you have an actual normal stock to take a look at, it's like a business and not a full of shit thing, then I'll take a look at it and we'll see what happens. Like this is a company that's full of shit. Morph. FRX, all right, a real company. And if you can, accompany your ticker that you want me to take a look at, you both want me to take a look at that, with the reason why we're looking at it. Whether it's a swing trade, a day trade, I want to hold it overnight. It's a 2-week thing I'm thinking. In 2 months, it's such and such. Should I invest in this for 3 years, etc.? Let me know. All right, so Forest Road Acquisition Corp. So this is a SPAC, which popped recently and has pulled back to sort of this ascending baseline. So these are the times to get in on these. They present the best risk reward. You can get in now, and at 12.68 is where it's at right now. I can get stopped out at like 12, somewhere down there, right? And only lose 68 cents. But if it goes your way and it pops that previous high of $18, that's like $5 of gain. Okay, so you could have potentially $5 of gain for only 68 cents of risk. All right. Now, remember, when you get into a trade, always know where you're going to get out. Because that's, at a loss. Always know what your loss is going to be. All right. SOS. Yes, but what for, Karen? Let's hear the reasonings behind why you want me to take a look at something. Bixby says SOS swing with crypto maybe heating up again. Thank you, Bixby. That's perfect. So SOS looks almost like that last one we were just looking at. SOS in after hours is now at 7.9. It's basically right around here at 8. So as you can see, it's already basically bouncing off of previous support. And so you would have wanted, hopefully to have gotten in at some point on this red day over here, or certainly today. And now you'll be holding to take profits over the next couple days and be watching for that you don't get, make sure you stop out somewhere soon. Watch you don't lose your money. EAT for swing trade, Sergio. Karen was saying long term on SOS. Long term on SOS, that's a little bit harder to tell because it's only now started to become popping. But I would not hold it long term in this kind of manner. In other words, the stock that's like going flippant like this, it's not exactly. It's like saying, can I have a lion as a pet in my house for the next 4 years? You know what I'm saying? It's not a good idea. So I would not go long term on anything flippant like that. Because basically think of it this way, Karen. Think of it this way. What if in 4 days SOS is at 17? You bought here at 6, and in 4 days it's at 17. Now, maybe you don't have a lot of experience and you don't understand that that's highly unusual for a long-term investment to go from 6 to 17, maybe in 2 years, or maybe in a year, or maybe 10 months. But in 4 days, highly unusual. So what should you do, Karen, if you're in at $6 and it's now at $17 in 4 days? What should you do? Yeah, you should sell. No, you should sell, because you're basically, what you're doing then is you're taking your 2-year gains in 4 days, which is the best fucking thing you could ever do in the world. It's so incredible, because now you're making how much people make in a year in just a couple days. All right. Snow, I want to hear your thoughts on where it's headed. All right, let's talk about that. Sure. All right, good. Thank you for letting me know on that. It looks like to the ground, which is interesting, but okay, no. When we get a broader perspective on it, it's not heading to the ground. Here, can you see kind of like how that chart is? It has a lot of hype, but if you look at the bottom edge of it, that's not all hyped up. That's a little more consistent. Look at what we have here. We have pretty much an ascending trend line. Can everybody see that? Here, I'll make it a little bit brighter by hovering over it. So that bottom trend line represents kind of the internal rate of return of the stock. So it's gone from 210 roughly to 210 to 260 in about 6 months. So that's 50 points in 6 months. Let's just call it 10 points a month. Let's just round it off, 10 points a month, okay? So that's what you can expect out of it. And the times to buy are any time that it's along the base of that trend line, right? So like now is a really good time to get in now. And then, like I said, if it gets all hyped up and jacks up all the way to 420 in 2 months, you take those 4-year gains. You take them now. You take them in 2 months, okay? And then you go put that into something else that looks like that if you want. If those kinds of charts and trades and stocks work for you, you go ahead and put that money into something else that is now not at the top, like Snow was way over here, but is now again down here, at the bottom of that baseline. And then you just do that again and again, and now you're making what they call fast money. I see 4 screens with a very small chart. You know what? I think I can make it show just the one chart for you guys. Yeah, hold on one sec. Let's see. All right, give me 1 second and I will make it do that. Yeah, in the next coming days, we'll be able to do that more. In fact, I'm not going to do that right now, okay? But I totally hear you, and I know that it's low resolution right now. We're just getting this new layout working. What I'll do, though, is I'll have a bunch of different, presentation modes to be able to pull up that particular screen with me in the upper right, et cetera, and I'll be able to flick right over to it. That'll probably be ready tomorrow, because I'll just do it after tonight's session. All right, sorry about that tonight. But you don't have to see it too clearly. I mean, can you see how I drew that sort of white trend line at the bottom of all the squiggly lines that we like to call a chart? That's it. It's Lego blocks, man. It's easy. You don't really need to see it in too much detail. It could be anything. All right, but we will get it in more detail tomorrow. Next, BLDP long term. Ballard Power System. So long term, yeah, I like this stock and I like where it's going long term. And if we were to strike that line along the bottom, you can see that this is kind of that internal rate of return again. Do you see that over there on the TikTok? This is BLDP. A little bit hard to see, I know, but that bottom line that I just drew, the white one, that straight line, that's the line in which okay, hey, this is a good buy. If it ever pulls back to that line, that's where you want to be at. Anything above that is hype. It's getting hyped up. Unless, for example, the business has become 2 times as profitable. So all of a sudden, like think of Netflix. Netflix originally started in the United States only, right? So they could sell, let's say they maximally saturated the United States market. So everybody who wanted Netflix had Netflix, and they just couldn't, they hit a ceiling. No more people wanted Netflix unless they were just born, and then they grew up and, 3 years later, now they're an adult and they get Netflix, right? Now you have a new subscriber, but that's just the growing at the population growth rate. That's not really fast enough. So, but they've hit full saturation in the US market. And then now they unlock Mexico and Canada, right? All of a sudden now they're going to be making revenue at maybe twice the rate as before. Because although Canada is huge, it's mostly ice and trees, not people. But the point is that now the rate of return of that stock has changed. So that could be happening here. Okay, look, you could strike a line here and say, oh, okay, well, ever since that date, now the rate of return is something a little bit more angled and more strong. And it does look like that emanates, that new rate of return does look like that emanates from this earnings report right here. And so probably during that earnings call, they announced, hey, we're expanding operations. We're going to be twice what we used to be. And so now then that tells you, okay, well, now I should probably make my buy now, like a couple days ago, right around here in the 29s. All right, that's a big, long BLDP explanation for you. All right, we got 25 more minutes of stock analysis. TPIC, but let's see, Griffin. Well, Timothy asked first, though, I think, Griffin, and if I'm wrong about that, sorry, but let's do Timothy first. TPIC for like a 2-week swing trade maximum, hoping that it's even sooner than that, apparently. No. Okay, so what I don't like about that is, look, if we just left out the last 7 days of trading, I would like this. I would like this a lot, right? If we just erased those 7 days, pushed them over, there you go. See that? There we go. That's a great stock. And how long has it been a great stock? Since March, right? It's been great. It's been great. And what I want you to do is I want you to be ultra fast at saying, hey, fuck you, stock. Because now look, it just dropped and it's no longer great anymore. Get away from it. Cut that stock out of your life. You're no longer involved with that stock. That stock now sucks balls. You do not want to be in that stock anymore. It's now breaking down radically, and you just don't want that kind of uncertainty. It used to be certain. You used to be able to go, hey, grandma, you should get in this stock. It just goes up. It just keeps going up. Now, when you see this, if you're responsible, not only should you not get in that stock, but you should call up grandma and say, grandma, get the fuck out. It's time to get out of that stock. All right. All right. Now, Griffin, I promised I'd take a look to your Nano Dimension or whatever that's called. NDM. Nano Dimension Limited ADR sponsorship. Yeah. So this is kind of a similar thing in that it basically started to double top and fail. Okay. It was doing great. It was great. It's I wish I could try to explain what you need to tell yourself to think in these spots, But essentially it's this. It's that this was a great stock. You are right. But don't stay in it till it's bankrupt. Try to figure out when it's no longer a good stock anymore. It double topped, it broke the previous pivot low, and it's breaking down now. It's doing terribly. It sucks. You no longer want to be in it. One day Evan will say Crocs sucks balls. Exactly, that's what I'm getting at is that, and you know what? The day that I say Crocs sucks balls is going to be pretty quick. It's not going to be like this. I'm not going to wait 10 days bleeding to death with my arm cut off. I'm going to get out and take my money way at the top and move it on to something else. Right? But think about it, Griffin, right? And that's what we have to do. We got to be a little bit more honest with ourselves with these stocks. Like, yeah, they were hot. And everyone said they're hot, they're hot, they're hot. And then you have these losers that stay on that are losing. They're literally losing. They're actual losers who are saying like, no, man, it's awesome. It's great. No, man, it's fucking terrible. It's falling. It's going to the grave now. And maybe it'll come back up. You don't know when. But why do you want to be risking that? That's not the kind of trading you want to do. That's not the kind of investing you want to do. Find something else that's doing great, like Crocs. Let's pull up Crocs and I'll show you what a good chart looks like. All right, there. That's a good chart. The thing is like only going up and up and up for the longest time. It's not breaking down. Do you see the difference? It's not breaking down. It didn't struggle to make another high and then top out at the previous high and then come down and then break below this pivot low and is now sitting here at 50. Like that other last two stocks you showed me. It's not down at 50. It's still good. This stock is still good. But when it does break down on us, it'll cease to be good. And I will no longer show you Crocs as an example of a good stock. I'll show you something like RKK or something. RKK actually has broken down, so it's a little bit rough, but it's gotten into this range before for a few moments, and it's excellently traded. So not the best example, but Crocs was the best example. Is RKK a good buy? It was. We doubled. We got it previously a couple days ago, and we doubled down on it when it came down yesterday in the previous sessions. And today, of course, we're up on it as the market resuscitates and comes back to life. Got to give me a little more than that, 213. Maybe you're late, but you need to give me a little explanation of why we're taking a look at the ticker. Somebody says BABA short term, and then we'll take a look at Apple open stores short term 130. All right, we'll take a look at Apple on that basis. Let's take a look at Apple right now because I'm just kind of thinking about it. And yes, today was a very strong day. What I would like to also take a look at, I was doing a weekly analysis, and we could pull that up over here as well. There we go. Not APL. There we go. So what I want to see from Apple on that chart up above there, on the upper left, well, for you, it's down below on the bottom right. You guys down in TikTok land can't see it. Go click on the YouTube link in my bio. You over there in YouTube, I'll get to your tickers in just a minute. Sorry, I forgot about you. All right, see, on the weekly, we need this green candle to break over this weekly's red candle high in order for it on that long-term basis to be bullish again, because right now it's bearish because it broke this pivot right here, this weekly pivot low. It's stuck in a downtrend. Apple is stuck in a downtrend. Now, all it needs to do in order to break that trend is get over 130. So where is it in after hours? It's at 128.75. So it's really close. So the key level, a very important level on Apple is 175. I'm sorry, 130. So if it can break 130, tomorrow or the next day, just realize that's very important. That's confirmation that Apple's now back into an uptrend and has confirmed a reversal, a bottom reversal on that. Would 130 on Apple be a good time to buy calls or shares? Yep. You betcha. Exactly at like 130, 130.10, 130.20 cents, something like that. And remember to buy 0.75 delta on your calls. Okay. If you are with me for a while, a member of our group or whatnot, you'll learn after a while that 0.75 calls are the way to go. Okay, good. Set your alerts. Yep, 130. All right, somebody had a BABA. Wanted me to look at BABA. Let's take a look at BABA. So, BABA is no longer super great stock to be in because it used to be. It used to go up and up and up, but it still was pretty jagged. I mean, if you want to be honest about it, it still was pretty jagged, but going up and up and up and up. And then at one point, it broke down, and then it broke down another pivot, and it made a lower high and a lower low, and then it made another lower high, broke that pivot, made a lower low, and then it tried to put in this almost confirmed reversal, but couldn't make it. And now it's rejected for about 10 session days, and it's not looking good. So BABA is either going to go sideways or down. And if it does go sideways and you have the hope that it's going to go up eventually, it's going to be a while. It's going to be like 3 or 4 months minimum, and it will probably do a flat top wedge pattern if you're lucky. I think probably BABA is just, look at this, is hugely bearish from the top all the way down to the bottom here, then back up halfway, 50%. That's pretty much a sign that we're going down to like 180 by September, maybe even 170. All right, we already did the EAT one. EAT, swing trade, good stock like Crocs. We already did EAT, didn't we? Wasn't I just telling you that was the piece of crap stock? No, I guess not. All right. No, okay, EAT. Yeah, EAT looks good, man. EAT looks good. It looks like the very best times to buy it are when it hits this orange 50 moving average line, but that you can get a lot of value out of grabbing it whenever it hits this yellow 20 moving average line. So let me zoom way up close because I know that's really tiny and hard to see. All right, does that help? I can get, what did we just get up? EAT. I can get that up on a lot of time frames here. Multiple systems. So you can see when you're looking at EAT on like 3 different views, a weekly, a daily on one system, and a daily on another system, that looks pretty sweet. But the thing is, you want to get it in the low risk area of a pullback. And today, like right now, it's too much. 70, it's mid-move, 72, mid-move. You maybe could have got in at 70 when green candle broke yesterday's red candle high. But another option for you would have been to take the gamble of getting in yesterday previous session at the low of 67, knowing that that's really close to the 20 moving average, and it rarely hits that, and every time it does, it takes off, right? Because if you could have got in 2 weeks ago on EAT at 64 when it touched the 20 moving average, that would have been a good swing trade. You just get in, and guess what? 2 days later, you'd be selling at 75. Sergio says, I did. All right, way to go. So just keep playing that. It looks good to me, man. Yeah. TTD for something like a month swing trade, asks Dylan. No, Timothy Dawson, sorry. TTD. No. See that? Like how kind of scraggly it is? And then you've got even the 50 moving averages above the 20. It's quite mixed up and sideways and twisting around and going sideways now. So that's not a good idea. You go look at the Target. Okay, look at how Target just continues to bounce off the bottom end of the channel. So when it's at that low pullback area like it is right now, I believe we alerted that today for entry. You've got a good chance that in a month that's going to be up at the top end of the channel. All right. But that's what you want to look for. Is stocks like that. Essentially that's the same thing as Crocs, except Crocs just never goes down. It's like it never pulls back that much, Went from 66 to, worst case scenario by the close, 61, just a 5-point pullback. If you had stock shares, that wouldn't hurt at all. And then it keeps zooming on, keeps going. I don't know why Crocs is doing so well. I really don't, but it just is. I don't know. Maybe they are doing that Netflix thing, which is opening up in more and more territories and getting more deals and expanding and expanding. Maybe it's worth doing a little due diligence on. But from a chart trading perspective, next time it comes down and offers a swing trade entry, I'll get in. I'll get us in, and we'll see if we can get like 5 points out of it, 6 points, which will be like half a grand. Palantir, try and ask me with why we're taking a look at it. All right, just do that. What was that last stock? EAT? Yes, it was. EAT. EAT. Yeah, looks pretty nice. Looks pretty nice. What I don't know what they do. If it's an ETF that covers restaurants or what? Fashion, Sergio says. Fashion. Okay, cool. All right, I'm gonna not ignore the YouTube people. Let's grab something over from YouTube. What's up, Big Money? Can you please bring up the SENS chart and tell me where my next buy-in should be? Thanks, sir. And Scrap, you need to let me know typically, on what time frame you're thinking. So, I think you're talking about a swing trade. So I can just kind of deduce that. So Sense isn't a super reliable stock. So I wouldn't even recommend you do that with it. This is just like something that's popping on hype, and then it's coming back to a baseline and popping on hype and keeps popping and that's like a penny stock. So I wouldn't even recommend you get in that. Sorry. But yeah. And then somebody says, which study is that? Sorry, can you explain your study with the shaded red-green areas? I did. Can you look at OZON and explain the charts after market? OZON? I don't know if I can explain the charts after market on it. After market, it doesn't look like it's changed much. It's kind of like exactly where it was. Anyway, it's a similar stock which gives back a shitload and then goes and then gives back a lot. It's not good. Not a good stock to be in. You see the pullbacks are almost 75% retracements. Those are drawdowns on your gains. So that's how you can tell a bad stock. A good stock should just continue to go up and up and up and up and up as much as possible. As much as possible. And when it pulls back soft. Like from the bottom here to the top here, and then during that pullback, that's only like a 30% pullback. That's nice. Could you tell me what you think about Roku? All right, you need to tell me like what you want me to take a look at Roku for. Did a covered call for SOS at $7 strike and 3/12 expiration date this morning, and it says that it is down $3. Does it say that because I'm seeing the contract through the buyer's perspective? For some reason, I'm not really understanding what you're saying. I'm a little bit confused for some reason, Samuel. Not sure why, but feel free to click through the link in our Zoom and come over to our Discord and ask me that in a private message, and I'll take a look like later tonight or tomorrow for you. Here's the link to our Discord. Hope I spelled that right. Don't want to do that again. Okay, there you go. How about CX? Can't see shit, says Dinosaur Phil Grant. How about CX for a long-term hold? Okay. Let's take a look at that on that basis. CX looks good. The fundamentals do not look so good. And then, yeah, so I'd be careful about long-term holding it. But yeah, it sure does look good. These are the kind of charts we like. CX. Everybody take notes, jot down CX along with Crocs. And by the way, how was it LIT? I think LIT. That also was one that was doing pretty good. Oh no, it's buckled over and is dying. All right, no. But it had a really nice chart before it buckled over. Yeah, that's a good idea. Yeah, no kidding. Yeah, let's just keep Crocs up right there. What are the fundamentals on Crocs? Yeah, Crocs is doing all right. Yep. And they've got good book value, $21. So right now they're trading 4 times book value. Workhorse came down to $15. Do you think it'll go back to $40 someday? Someday, but not in the near future. You know there's other stocks that you can put that money on and make it all back, right? It's like some people will stay in that for the next year and a half until it's at 40 and they get their money back. And in the meantime, they could have been a millionaire by trading all that money on other stocks that actually went up. So it's pretty funny, if you're down on a stock, why are you holding it? Hang on one sec. I think I got some tea. Thank you. Yes. Oh yes, that's how that is very relieving. Now you can go over to other people and say you just type a ticker, or you say, "Do you have any thoughts on this?" or whatever. But for me, I think that's absolute bullshit when you do that to people. So what you need to do is you need to type the ticker and then tell me why we should take a look at it. What do you want me to look at it for? Because I can tell you that stock looks great if you hold on for the next 45 minutes and then sell. I can tell you that stock looks great for a week and then get out. I can tell you that stock looks bad for the next year, but for 3 years, go ahead and keep it. You know what I'm saying? So thoughts on whatever, I can give you every thought possible. And we don't have time for that bullshit. So please tell me what you want me to take a look at a particular stock ticker for. And let's grow up and get out of the stupid, hey, let me just tell this guy a stock name. And can you give me some thoughts on that? All right, let's have a more mature request. Sun W long term. I guess we'll start there. That's the best we can fucking get. Here we go. Ben has a really nice paragraph one that I'm going to come to in a second. Here we go. GME, it held together for the whole day, which the resistance is high. I just want to know by the, I'm not sure, I guess it got cut off, but keep going. Anyway, here we are on Sun W, Sunworks. Sunworks just had the mother of all runs a couple months ago, or in January. And now it has buckled over and gone into a downtrend. That's a confirmed downtrend. Like, you really need to learn to read charts. When price went down, pivoted up, and then went down and then broke that previous pivot low, like that's confirmation that it's going down now. So, okay, we just have to figure out, how low could it go? Well, I would say don't even get in a stock that's doing that right now. Why don't you wait for something that's a little more consistent, like good old buddy Crocs up there. All right, Digital Turbine apps. We've gotten a couple of requests for that, but let me go with somebody who had an actual explanation with their ticker. Do you like Fubo after the beatdown? Coming into earnings after the last earnings was better than expected. Let's see. All right, that's a good explanation right there. So it has been beaten down. It's been kind of going sideways, though, if you look at it from a rate of return perspective. It's at the baseline of the rate of return that's up on the diagonal there. So it might be a good buy. But what do I think going into the earnings? Gosh, I really don't know. I don't like to predict earnings. I'll play earnings afterwards or on the day of, the day they're already out, so that we can get the price targets from analysts. But Fubo, I don't know. I think there's just way better stocks out there, guys. Fubo is just going sideways, and you're just going to the casino and spinning roulette. Somebody asked a few minutes ago, for apps. Let me take a look at that. I know that's a big cap. All right, apps seems to be holding together. Yeah, that looks really good. Let me take a look at the fundamentals on that. Oh man, wow, wow. The fundamentals on apps are amazing. No wonder it just keeps going up. Yeah, I like apps a lot. So, yep, stick to apps. Pretty good. Pretty good. Uh, so you said, hey, Evan, can you look? Holly says, hey, Evan, can you look at UCTT? It's in my long term portfolio and a play on semiconductors. I love semiconductors, by the way. I think that's one of the best plays out there right now. They're returning about 38 to 42% per year. That's a really great return. I'd like to add on dips, but I didn't grab it last week. Is it too late to add some more? I can already tell you yes, because if you're asking that, then it usually is. And the best time to get these things on the dips are when they're too low. But anyway, let me take a look at it to be 100% sure. But it's not a good idea to get things mid-risk. So the similar to apps is, it's pushing up towards the top end of the range. So if you try to draw like a channel on that, can you think about that in your mind? Let me compact this down and see if I can throw a channel on there so you can see that. I know it's hard to see you guys, but maybe you can a little bit. So if we were to draw a channel along the bottom and then move a parallel line over to the tops that it's been hitting, we get this, right? So now you get a real good sense of the fact that right now it's about 65% to 70% done with moving to the upside. Understand? Holly, it's going to go and hit the top of this and then come back down like it's done every time and time again. So the time to get in would have been 2 days ago, right around 45. Now it's at 51, and it's going to end up around 54 if you're lucky. Right now you're up. That's great if you were in it. And I know you're not, but the time to buy would have been down at the baseline of the channel. That's the best way to handle that. What do I use to check fundamentals? I have my own proprietary charting system to check fundamentals that I built over a year and a half, like on a daily basis, building this freaking incredible system that I've got up here in the upper left. I can read the entire history of the fundamentals of any stock up there on the chart, and I've got it so that it's color-coded and layered, so I can instantly see if a company's in distress or if it's in good shape. And I'm just going to have to keep the secret sauce of that close to my chest, but tell you that apps looks really, really great from a fundamental basis. Really, really great. I would love to have bought it lower, but it looks like you don't get a chance, man. Looks like you don't get a chance. All right, we've got about, that's it here. That's our hour. And then what we're going to do is now spend the next 10 minutes taking a look at what may have popped in after hours that we could potentially swing trade. I'm sorry, that we could potentially make a dip buy trade with options tomorrow morning, or possibly breakout trade or trade on the 2-minute candles. We have a lot of different ways we can trade. So let's take a look at the stock market chameleon. I can pull that up on this chart right over here. Check the after hours. And then we have this list right here. And what we're looking for is, hundreds of thousands, if not millions of shares of volume that traded. And then ideally for the options make a dip buy trades, anything over 2 billion in market cap. All right, so the first thing we want to take a look at is Zoom. We know that went up way in after hours. So it closed right here at 411, and then after hours settled at 443, which is way up here, but it even popped over 450. So let's take a look at that on the 5-minute chart, I say. Oops, I don't know what I just grabbed, a 4-hour chart. All right, that's fantastic. That's a fantastic shape. So for those of you who are more familiar, you know that what we try to check out is how well does it hold its pullbacks, and does it make any further advances, and how much retracement did it actually have to endure. So that tells you how bullish it is, how bullish of a reaction it is, right? Well, basically what happened is you had the earnings release and you had this incredible mega push all the way to almost 460. And then the conference call didn't start until 5 p.m. It looks like 5 p.m. I don't know which time zone that is in. It was basically 1 hour, after the earnings release. In that time, people tried to hold on, but nobody could get any further bullish about it. And so it started to give back a little. Then during the conference call, probably there was a lot of careful talk. And so it pulled back a little bit more. But it seemed to be a pretty good result because it pretty much held. It pulled back maybe 30%. 30%. Yeah, we'll take a look at Rocket. 30% pullback. That's excellent. So tomorrow, what we hope to see on something like this, a big cap that's very popular, is analyst upgrades from some of the top firms. And if tomorrow happens to be a green market or even a breakout market day, oh my God, we could make a ton of money on Zoom. I made $27,000 on Zoom one day trade, I think 6 months ago or 4 months ago. So just in one day, you can make a dip buy trade like that. We just sit in it. We get 10, 20, 30 options, contracts. And after about 45 minutes, you might be up 10, 20, 30 grand. Zoom has done that for me in the past. All right, let's take a look at you say RKT is up. Well, it's up 7% in after hours. At least that's where it ended up. Let's take a look. Oh, yeah. Look at that. I mean, that's as bullish as it gets. See, every time it made a new high, which was right here, the pullback was pretty mild, and then it pushed higher, broke higher again. That's a lot of bullishness. Broke higher again, pulled back, broke high again, pulled back, broke high, pulled back, broke high, broke high. You get the idea. So tomorrow, let's see where that ends up. Rocket looks really good. Market cap. Pub M, I have no idea what that is. Pubmatic, nah, that's a too low volume. Okay, we have 10 million volume on SOS. Let's definitely take a look at that. SOS, similar to Rocket, outstanding after hours bullish signature. Sergio says Riot, but of course that's tied in more to the after hours of Bitcoin, So there's some other forces at work there. It's not like, the company's doing better and the analysts are going to upgrade them in the morning because they've done good hiring and they have good staff. You know what I'm saying? They're highly dependent on Bitcoin, and Bitcoin's price. So, yeah, I don't really think that, price movement on Riot is not something that you can actually momentum play like that. All right. Just want to make that clear. Let's see. Rocket. All right. We're going to move down the list a little bit more. MSTR. We want to see, lots and lots of volume. Possibly MIK. Even more so CAN. Let's take a look at MIK. Is it going? There we go. All right. MIK, that can work. A little stair-steppy, but the pullbacks were only about 30-40% and then held, and then it broke high again and then held. So let's take a look at let's not rule out Michael's tomorrow. Must be opening some stores or something. CAN. Take a look at that. You're welcome, Mr. Buffalo. You're very welcome. Okay, well, make sure you click through my links, okay, in my bio. All right, over here on CAN, it didn't go up a lot. I'm only talking about 5%, but it was nice and it was smooth, and so we'll see where that goes in the morning. And there's Riot right down at the bottom. That's only 5% up. So we really want to see, the real strong momentum gainers for our mega dip buy trade like Zoom, and for our momentum breakup trades like SOS and some of the other ones. We'll put them on screen tomorrow, and we'll be watching them all right here. We'll be able to watch them all. So we'll be able to catch everything. We won't miss anything. Cool. I hope to have you trading with me tomorrow. And thank you for attending the stock market class tonight. I hope that was helpful. That's about all the time we have. I wish we could do it. I wish I was a freaking machine or a robot. I would definitely do this just nonstop, 24/7. Love it. Love it. Otherwise, cheers. And I'll see you in the morning. Good night, everybody. Make sure you click through the links and join our group. Love to see you.